Still think people who hold fiat dollars or Federal Reserve notes, they're going to be losing out in terms of purchasing power, and that's why I keep going back to talking about gold and silver and hard assets in general. Gold is really the ultimate risk-free asset. I think it's pointing to another leg up in the general commodity prices because if you look at the major commodities outside gold and silver, they haven't had such a good year as gold.
The United States could quickly be heading towards a significant recession as consumer confidence is currently in a free fall ahead of Donald Trump's gala inauguration ceremony. Financial analyst Mario Innecco asserts that the global economy is already underperforming. He believes that if the U.S. enters a recession, its impact would be more severe in relative terms compared to regions like Western Europe and the UK, which he considers to be already in recession. Innecco strongly prefers hard assets such as commodities, gold, and silver. Gold is on track for one of its most significant annual gains this century, surging 26% amid U.S. monetary easing, persistent geopolitical tensions, and robust central bank purchases. This year's impressive performance, marked by a series of record highs, suggests a potential shift in market dynamics, as these gains have occurred despite the typically unfavorable conditions of a stronger U.S. dollar and rising real Treasury yields. U.S. Treasury bonds saw increased demand as investors sought safe haven assets amid rising geopolitical tensions. The yield on the benchmark 10-year U.S. Treasury rose by 0.76% or 35 basis points to 4.612%, while the yield on 2-year U.S. Treasury bonds declined by 0.46% or 20 basis points to 4.312%. Mario Innecco emphasized the bond market's pivotal role as the backbone of the financial system, often referred to as the risk-free rate of return. While mainstream financial analysts and the press highlight the importance of U.S. Treasury bonds, he argues that gold is the ultimate risk-free asset. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
I think the rest of the world is underperforming already in relative terms. If America goes into a recession, yeah, and I think the rest of the world, like especially Western Europe and the UK, we're already in a recession and our markets haven't performed as well. So I think in relative terms, we won't do as badly as the US. The US has a lot more to lose. It reminds me of Japan just before the end of 1989 when the Nikkei topped and only reached that level this year. It took 40 years. So that's what the US reminds me of. I try to look at not where to put capital, but in terms geographically, but in terms of assets. I'm still, as I've said, hard assets, commodities, and also gold and silver. I guess you could look at some countries. It's getting harder and harder to invest because, for example, Russia is the biggest commodity, has the biggest commodity reserves, but we can't really invest there now. And the world's getting so geopolitically fractured. Globalization is like falling apart. So I'd stick to like Canada, maybe some South American countries, and the mining sector and commodities like soft commodities, hard assets. And maybe Europe will outperform, even though Europe is looking really bad. Who knows? We are ahead in our kind of meltdown. But yeah, I wouldn't look to geographically too much, but diversifying as well is important if you're going to invest in the stock market, I would say. The bond market, treasury market is at the base of the whole financial system. It's the supposedly risk-free rate of return. I would say for us, I'm not sure if you are into gold, but I would say gold is really the ultimate risk-free asset. But for the general public and for the mainstream financial press and analysts, treasuries are important. And if the US government has to pay more to borrow, like from 5 years to 30 years, corporations are going to have to pay more. The public individuals are going to have to pay more in their mortgages. And also, it's a rate that's used to discount future earnings and therefore affects the price of stocks. So that's why it's so important. And it's a much bigger market than the stock market, even though the mainstream financial press, the first thing they focus on is the stock market. Most people, the general public, they look at stocks. They don't really look at bonds, but bonds are really, really important, I would say.
Gold and silver prices are positioned for a robust finish to 2024, with gold heading toward its strongest annual performance in over a decade, while silver is on track for its best return since 2020. Silver demand often surges during economic growth, although it tends to be more volatile than gold. In contrast, gold is a more effective portfolio diversifier and less impacted by financial downturns. Historically, gold and silver were used as money, but in the modern era, currencies are backed by growing debt levels. Mario Innecco highlighted the rarity of gold posting a down year and expressed optimism that 2025 could continue the upward trend for precious metals. For his 2025 strategy, Innecco emphasized patience and reaffirmed his commitment to accumulating gold and silver, as well as investing in undervalued gold and silver mining stocks, which he believes are poised for significant gains. Now let's redirect our attention to a video.
I don't see any change in the fiat currencies because gold and silver are just like a flip side of the currencies. Gold and silver used to be money, so we've got a problem with debt. The currency these days, the other side of the currency is the debt, and the debt is growing, and they can't let the debt be liquidated because if you do, everything implodes on itself. So I can't tell you what price gold is going to be or silver, but I think, yeah, they will be higher, a lot higher going forward. I think 2024 has been a pleasant surprise for gold, maybe not so much for silver, even though silver is up. If you look back to 2000, the average increase every year has been around 9 to 10%, depending on the major on depending on the currency that you look at. So yeah, that would be my best guess. Maybe a 9 to 10% increase in gold, and I think silver will outperform this year gold. So maybe 20, 30%, I would say.
Interesting. So you think we could see 2 consecutive years of precious metals growth?
Yeah, I mean, that's if you look at the data, there's been only maybe 3 or 4 years since the year 2000 where gold was down on the year. So I don't see why we couldn't have another up year, even though it might be a little less than this year. The central banks that are moving the price are the non-Western central banks. So I think that's a symptom of the de-dollarization, and I think that also is going to continue. And I think it's pointing to another leg up in the general commodity prices because if you look at the major commodities outside gold and silver, they haven't had such a good year as gold. And yes, I think we're going to have a second wave of higher prices or what some people call inflation going forward. And I focus more on gold and silver, but I see other commodities maybe catching up with gold and silver. It doesn't mean that they will do better than gold and silver. So that's the way I see it.
Interesting. What is your game plan for 2025, broadly speaking?
For me personally, like,
Hmm.
yeah, I mean, just to try to keep patient, yeah, and keep stacking gold and silver, maybe, and also add on to miners. I do have some gold and silver miners, and I think they're going to do really well, even though the last 2 months haven't been very good. I think their time will come. Yeah, and they're heavily undervalued versus let's say the S&P. So that's my game plan.
The diverse performance of metals in 2024 underscores the absence of a single dominant factor driving their trajectories while drawing attention to the outlook for both base and precious metals in 2025. Investors are closely monitoring uncertainty surrounding U.S. monetary policy, potential geopolitical and economic frictions during Trump's presidency, and China's measures to stimulate growth. Goldman Sachs noted that while traditional factors still influence the gold market, central bank purchases have been pivotal in increasing gold prices since 2022. The firm forecasts that gold could climb to $3,000 per ounce by the end of 2025. Given the current economic and geopolitical landscape, do you think this target is realistic? Join the conversation, share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.